Thinking about buying a home in 2025? Getting mortgage pre-approval is a crucial first step, but it can feel overwhelming if you're unsure what is involved. The good news is that once you understand this process, you'll be in a much stronger position to find and finance your dream home. Hi, I'm Nicola Winters, a Mortgage and KiwiSaver advisor based in New Zealand. I help Kiwis make smart financial decisions, especially when it comes to buying a home. In today's video, I'm going to take you through a step-by-step guide on how you can get a pre-approval in 2025. We'll cover everything from preparing your finances before applying, the actual pre-approval process itself, and then what to do once you've received your pre-approval, including navigating conditions that need to be met and a little bit about the home buying process. Make sure you grab yourself a pen and a paper if you need to take notes, and let's get into it. Before applying for a pre-approval, it's essential that you take a good look at your financial situation. Lenders will be assessing your income, your expenses, and your overall debt position to assess whether you can afford a mortgage. A steady income is key. If you're self-employed or on a contract, then you may need to provide some additional documentation to support your income and show that it has been stable over a period of time. Reducing your unnecessary expenses in the lead up to your application can also help to improve your borrowing power. Your credit score also plays a significant role in the pre-approval process. Lenders will run a credit report on you to check your credit history and ensure that you've paid any debts that were owing on time. You can request a free copy of your credit report from places like Centrix, and this will be able to give you an idea of whether you have any errors on your credit report or any unpaid defaults. If your credit score is lower than expected when you get your credit report, you can improve this by paying any outstanding debts off and ensuring that all bills are paid on time every time. I have a video all about how to boost your credit score if you need to, and I'll link that up over here and down in the description if you'd like to check that out. The next thing that you need to think about is your deposit. The size of your deposit will impact your loan approval and your borrowing amount. Most banks require a 10 to 20% deposit, but there are a few exceptions. If you're planning to use KiwiSaver as part of your deposit, make sure that you meet the eligibility criteria to be able to withdraw this and ensure that you understand the withdrawal process. There are schemes like the Kāinga Ora First Home Loan Scheme, which can help borrowers with a lower deposit. One thing to keep in mind is that this process can take a little bit lower for the pre-approval. The next thing to look at is your liabilities. Lenders assess your ability to repay a mortgage based on your existing financial liabilities and commitments. If you have credit cards, car loans, personal loans, or buy now pay later in place, these can impact the amount that you may be able to borrow. You may like to consider potentially paying some of these off ahead of applying for a pre-approval. Even credit cards that are paid off in full with a zero balance owing can impact your borrowing ability as a lender factors in the credit limit. Sometimes it can be a good idea to touch base with a mortgage advisor ahead of your plans to buy a property so that you can get some feedback on where you sit financially now and things that you could do to improve your situation. When you're ready to move ahead and get a pre-approval, you can either apply directly with your bank or apply through a mortgage advisor. Going through a mortgage advisor can be beneficial as they have access to multiple lenders and can advise you on who may be the best lender for your unique situation. Different lenders have different criteria, interest rates, and offerings, so it's worth exploring your options before submitting your application. To submit your application, the process is fairly straightforward and it involves filling out an application form and submitting the required documentation. You'll need to provide several documents to support your application. This includes things like ID, payslips, bank statements, and details of any existing debts. If you're self-employed, you'll typically need to supply financials from your accountant as well. If you have all these documents ready before you start the application process, it can really speed things up. On average, pre-approvals take between 7 to 10 working days to process. However, this can vary based on the lenders and their turnaround times, which change week to week. It can take longer if you're applying through the Kāinga Ora First Home Loan Scheme, as the application first needs to be approved by the lender and then also by Kāinga Ora. When assessing your application, lenders look at several key factors. These include your loan to value ratio, which compares your deposit size to the property's value, your debt serviceability, which means your ability to meet repayments based on income and expenses, and your overall credit worthiness. They'll also stress test your ability to pay the mortgage if interest rates rise, so make sure that you account for this and allow some flexibility. Once your pre-approval is granted, it will outline how much you can borrow and any conditions that you may need to meet for a full approval. Pre-approvals typically last 3 months, so if you don't find a property within that time, you may need to renew or extend it. Your mortgage advisor can assist you with this process. Some pre-approvals come with conditions that need to be met before a loan is fully approved. Common conditions that you may see on a pre-approval may include things like closing off and repaying certain debts, providing updated financial statements, providing a building report for a property, or even providing a registered valuation. Your mortgage advisor will be able to go over all the conditions that need to be met with you, so make sure you fully understand what is required. It's important that once you're pre-approved, you look to keep your financial situation stable. Changes such as switching jobs or taking on new debt can affect your pre-approval. I recommend before making any changes to your financial position that you chat this through with your mortgage advisor. So once you're pre-approved, the fun begins and you can now start looking for a property. It's important that you know what your approved price range is. When making an offer, it's important to understand the difference between a conditional offer and an unconditional offer. A conditional offer allows you to back out of a contract if certain conditions, like finance, are not met. An unconditional offer means you're committing to the purchase no matter what, so you need to make sure that your finance is in order before you go down this track. If you're considering buying at auction, please be aware that all bids are unconditional. This means that you need to have your finance fully approved before you can bid. There's no option to add conditions afterwards. You should also make sure that you complete all your due diligence before you bid. This could include things like getting a building report done and checking the title. You need to make sure that you do all of this before auction day. If you win the auction, you need to pay the deposit immediately, so make sure that you're prepared for this. I have a video all about how to buy properties at auction, so if you'd like some more information about this, feel free to check that video out and I'll link it down in the description for you. Getting pre-approved is a key step towards home ownership. While the process can take some time, it will make the overall experience that much smoother. By taking the time to check your financial health, choose the right lender, and then understand what happens once you're pre-approved, you'll be well equipped to buy your home. If you like this video, don't forget to give it a thumbs up and make sure you subscribe to the channel for more home buying tips. If you have any questions about mortgage pre-approval, drop them down in the comments. And if you need a mortgage advisor, feel free to get in touch as I'd love to help. Thank you so much for watching and I'll see you in the next one.